This module is about compilations, and in particular the Canadian Standards on Compilations 4200. I hesitate to call them new because they've been around now for about 5 years, but we're going to go over them, and as always we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, we are going to find that this section on compilations requires lots of documentation, but requires no work. In other words, no work of any kind to determine whether or not the financial information is correct. Accordingly, we should do the documentation, and in particular, we should go out of our way to do no work, because doing work will make it look like we're broadening our understanding of the section, and perhaps would allow someone to assume that we had done more or had done work to make sure the financial information was correct, and we're not supposed to. So I'm going to just go through section 4200 paragraph by paragraph and contemplate what it means. 4200 paragraph 1 says what the standard does, talks about our responsibilities, and talks about the form of report. Paragraph 2 says that the standard does not apply to a number of things, and in particular it doesn't apply to tax returns. And this is something of a problem we're going to find in the next paragraph, because we used to like to put a notice on T1s and T2s saying that they weren't audited. So a third party getting their hands on a T1 or T2 would know not to rely on it. So this says that the compilation standard does not apply to those things, a long list. But paragraph 3, and I don't know why the standard setters did this, says you cannot attach any communication to, for instance, a tax return. You cannot say, we didn't do any work on this. And if you want to attach a communication in the little single line on a tax return where that used to be available, you must do a complete compilation with all the things you've got to do and document, and attach the good page-long compilation report. Now, the client can attach a report. The client can say, I did not ask anyone to give any assurance on this, if you want to get around it, but that may be too much work. And this is clearly the opposite of previous advice. Practice inspectors across Canada used to insist that a notice to reader be stamped on, in some cases, every page of a corporate or personal tax return to disabuse a third party from relying on the accountant doing it. Now, paragraph 4 says that quality management rules apply. And to some extent, I say to what? We're not supposed to do anything. The only thing we're supposed to do is document stuff, though I must admit that my attitude has always been that during the annual quality management process, it would be not a bad idea to look at notice to readers, now compilations, to make sure that no work had been done, and to make sure that the required documentation was present, and to make sure if we had a checklist or something like that, that it had been properly completed. So if you were not doing that before, if you were not including notice to readers in the annual quality management process, you now must include compilations, which actually is not a bad idea. But what we are supposed to do in the engagement in terms of quality is nothing. Paragraph 5 explains why standard setters think this is a valuable service. It says we help management comply with the disclosed basis of accounting. And when we look at paragraph 6, we see we do no work. So we are not doing anything to help management comply with anything. It says we comply with standards and ethics, and sure, but we do no work. So we comply with the standard by doing no work, and the ethical requirements are almost non-existent. So complying with standards and ethical requirements doesn't mean much. And it says it's valuable because we issue a clear report. And here again, I guess I would disagree with standard setters because it is the most unclear report possible. Paragraph 6, the most important paragraph, which I quote in its entirety, but does not require the practitioner to perform procedures to verify the accuracy or completeness of information. We do not do or document any work. It's very, very clear. Though the previous paragraphs have all implied that we're doing something and that we're helping management make sure the information is correct. And paragraph 6 is very clear. No, we are not. So we have to be very careful to follow paragraph 6. Paragraph 7 says we may use a variety of bases of accounting. Some people in their note have said, well, we're using Canadian accounting standards for private enterprises. And that's probably impossible because you have done no work, so you have absolutely no idea what the basis of accounting is. Canadian accounting standards for private entities or enterprises would require a full set of financial statements and a complete set of notes. And how, unless management did it, how you could have any idea whether or not the set of notes was complete. And if the circumstance of the engagement is management says, gosh, we don't know how to take our general ledger trial balance and turn it into a set of financial statements so we can file a corporate tax return, there's no way they could do a complete set of GAAP financial statements. So that's not on. The other thing then you have to be very careful about is you do not want and you have to have a note describing the basis of accounting. And you don't want it to sound as if we have any idea whether or not the basis was followed. So it has to be very simple basis of accounting that we could perhaps have some clue as to whether or not it had been followed, but something like the basis of accounting is, this is what management gave us, something like that. Paragraph 8, you must have a note that describes the basis of accounting. This is to assist users, and again, I think standard setters are attempting to fool users because we really have no possible way of knowing whether the note is correct. And so if users are deriving assistance from that, they're being misled. So we must have a note, and it's got to be as brief and as simple as possible. Paragraph A38 provides something of an example. The financial information has been prepared on the cash basis of accounting. Pretty simple. We can probably assume that that's correct. The client tells us that. Now, this is supposed to be the basis of accounting that management picks. So we got to make it very clear that this is management's basis that they have picked. We might decide to title the note management's basis of accounting or basis of accounting selected by management and say that. We might add, and if you're doing this for a client so they can do a tax return, they kind of got to include accounts receivable because that's taxable. Probably want to include accounts payable because that's tax deductible. So there are going to be probably some accruals, so we might extend that to say with certain accruals provided by management. Maybe we use the word prepared on the cash basis, or maybe we use the word compiled on the cash basis. Standard setters use the word prepared. If you feel better with the word compiled, maybe you can do that. Paragraphs 9 to 12 states the authority of 4200, fine. Paragraph 13 says when it is effective, and basically that says it's effective now. Paragraph 14 says the objectives of the standard are to assist management compiling financial information in accordance with management's information and management's basis of accounting, not to help third parties in particular. And the objective is to use the right report, which is rather too long and in my humble view rather confusing, but never mind. Paragraphs 15 to 17 provide definitions. You can read them if you feel like it. Paragraph 18 to 20 describe the requirements. Now we are to have an understanding. And let us observe that if someone said, "Do you understand this section?" you could say, "No, I don't." And they say, "Well, the standards require you to have an understanding. You obviously haven't complied with standards." "Oh, well, I don't understand the section. I do have an understanding of the section. So I've complied with the standard, and we should have a checklist that says, I have an understanding." We are to comply with the requirements unless they are not applicable, and I think we might fold those words into a conclusion at the end. And don't say you compiled unless you did, though awfully hard not to, seeing we don't have to do anything other than get documentation. So that again could be folded into the conclusion at the end. 21 says ethical rules apply. Now things like integrity, due care, and confidentiality, sure. Due care in this context would be not to do anything. So even though these ethical rules apply, there's really not much to them. The only integrity thing you could violate is not getting the required documentation. So sure, but saying the ethical rules apply really doesn't mean much. The only real significant ethical rule is if you're not independent, you're doing a compilation on a company you own, you have to disclose that. So complying with the ethical rules really doesn't mean much. It sounds like it does, but it really means very little. You are to exercise professional judgment, so have a checklist step that says, I exercised professional judgment. Engagement level quality management, the partner is to do that, so I think we need a checklist step saying I was responsible for engagement level quality management. Doesn't mean much, but we can say it. Don't have to do much. Paragraph 24, we are to ask management about the intended use and to get management acknowledgement. That basically means we need an engagement letter where management tells us what the intended use is and says, yes, that's what it is. So a signed engagement letter satisfies paragraph 24. Paragraph 25 matters for the engagement letter if there is a third party. And management has to make a couple of promises. They have to say, here is the third party, and we will provide them with any information they ask for. And management also tells us that the third party has agreed to the basis of accounting. And I don't exactly know. The third party doesn't have to tell us they've agreed. Management has to tell us that the third party has agreed with management on the basis of accounting. So do so. Now the only issue I have with this paragraph is it could be when we get the engagement letter signed, there is no third party. Or if there is a third party, it could be that after the engagement letter is signed, a third party arises, a new third party or a second third party. So I think I would prefer to have in the engagement letter management promising us that if that happens, they will do A and B with the new third party as well. Otherwise, it kind of leaves that open and leaves us exposed. So I would do that. Paragraph 26 says we should agree the terms with the client. And the requirement kind of is that we date the first letter before the first engagement begins. So that's only a concern the first year we have the client. Afterwards, when the letter is to be dated is unspecified in standards. But at very least, you should date the first engagement letter before the first engagement begins. So get an engagement letter and have a checklist prompt. Now, paragraph 27 has rather a long list of things to include in the engagement letter, so do so. Have a standard engagement letter. Make sure that all those things are there. And see the previous slide, have a checklist step that says we have a standard engagement letter. Paragraph 28 says either get a new engagement letter every year, which is pretty simple. You have it in word processing. You send it out, and I really don't care when you send it out. The first engagement letter has to be obtained before the engagement begins, though as a practical matter, it just means dated before the engagement begins, irrespective of when you actually got it. And some people pay attention to the date of the new engagement letter. I'm kind of happy with getting a new engagement letter at the end of the current engagement for the next engagement, and do that annually. Other people say, well, let's have a process which is more work, whereby 3 months before the engagement begins, we get an engagement letter and file it. Now, seeing it's something that's very important to have and to have in the file, I kind of like saying, for this year's engagement, I'm going to get an engagement letter and a rep letter, and I'm not issuing the financial statements until I have both of those and they're in the file, and it's for next year's engagement. So you either get one annually, or there's a list of 7 things to consider and document to avoid getting a new letter. And I kind of look at that list and go, that would take me a day to obtain and document, and a lot of work to determine that I don't need to get a new letter. So simplest in my view, just to get a new letter, have a checklist prompt, we got a new letter. You have to have knowledge sufficient to do the engagement in your professional judgment. You have to know about business and operations. You have to know about accounting systems. And you have to know the basis of accounting, which is in the engagement letter, so you do. Best approach, have a long checklist with every possible aspect of every possible business and every possible accounting system, which will take too long to fill out and will probably be done wrong, and will probably just, rather than thinking about it every year to think if there have been any changes, it will just be duplicated every year. So I don't like that, time consuming. B, have a blank box for the engagement partner to fill in and deem that we have sufficient knowledge of the 2 things on the previous slide. And that would be my preference. Rely on the engagement partner to, in their judgment, have enough information. Paragraph 30, compile the information. And maybe that turns into a checklist prompt as part of the conclusion. 31, this is something I kind of don't want to do. If we help with issues, which I hope we don't, because we're starting to do work and take responsibility, discuss it with management. And as I say, I prefer not to because it sounds like work. If we do help management, remind them that they've forgotten to provide us with allowance for doubtful accounts, for instance. Document that management has accepted this responsibility, and in case we forget, I would have that in the rep letter automatically. Just automatically say, if we provided you with any help, you took full responsibility for it. Complies with paragraph 31. 32, our conclusion. And I prefer only one conclusion, particularly in compilations and reviews. Don't like that many in audits either, but paragraph 32 provides us with the conclusion, and make sure we use the right words. Because if you use the wrong words in the conclusion, you could imply that you had done some work or developed some level of assurance. Read and consider whether such compiled financial information does not appear misleading. So your conclusion is, I read and considered that the compiled financial information does not appear misleading. And we've mentioned on previous slides that perhaps there's some other things we want to embody in that conclusion, so that conclusion might get a little longer. So to go over the conclusion again, and I think I said to consider that the compiled information, I read and considered whether the compiled financial information does not appear misleading. So read and considered, based on my knowledge, whether is the kind of thing you want to say. You cannot conclude, I don't think, the financial information does not appear misleading. It's got to be in the context of read and considered. So be careful with that, and be careful with the words, and use words that you think are correct in your conclusion. Paragraph 33, if the information appears misstated, ask management to correct. And paragraph 34, if management won't fix, and presumably in almost every case, management wants the financial statements to be at least appropriate enough to be included in a tax return. They don't want them to be close enough to being right. So if we observe no allowance for doubtful accounts, manager goes, oh yeah, that's tax deductible. Yeah, here's the allowance for doubtful accounts. And most of the time, management's going to fix things we suggest. That's the nature of the service. But if we find something is wrong and management won't fix, we have no choice other than to quit. We can't qualify like we do in an audit or review. We have to withdraw. And the section includes some hints as to how you might do that properly and politely. You have to be very careful what you say. You might even want to talk to a lawyer so you don't say anything libelous or slanderous accidentally. Paragraph 35. Management is to take responsibility for the financial information. And I want management to do that in a letter that they sign and send to us. So it's not explicitly required anywhere, though there are a number of things I would like to include in that. I think we need to have a representation letter. You get an engagement letter before the engagement starts. You get a representation letter when the engagement ends. And my preference would be to confirm again a lot of the things that are in the engagement letter, in the rep letter, as the engagement ends, covering myself with documentation. 36 to 38. What happens if something happens after we finish the engagement? Now, because we only ever talk to these clients once a year, it's unlikely that that will ever occur. But if it does, 36 to 39 say what we're supposed to do. Now, paragraph 39 specifies what the report has to say. And we have no choice. I worry that standard setters have developed something that might mislead third parties, but this is what we're required to do, so we have no choice. Now, it is called a compilation engagement report. And before this section, standard setters and practice advisors were adamant that we should not use the word report for a notice to reader because we had done no work, and the word report makes it sound like we've done something or we've done an audit or review. So the word report was strongly discouraged. We have an addressee, which is exactly like an audit or review. We say we compiled, which makes it sound like we did something, and as we've gone through this section, we find we've done nothing. We identify the statements and a date, which makes it sound like an audit or review. We refer to the note on the accounting policies, which makes it sound like we checked and we haven't. Said management's responsible, that's okay, but we say the same thing in an auditor review report, so that doesn't distinguish the level of assurance. It says we followed standards, followed ethics, and helped management. Well, following the standards requires to do no work, so that's a bit misleading. There are almost no ethical requirements, and saying we helped management makes it sound like we did something or checked something. And then after having done all of those things, which makes it sound like we've done some work, we've kind of done either an audit or a review or something, we say we've done no work and have no conclusion and warn people that it may not be useful, and that's buried at the end of a page-long report. And then we have a signature date and address, again, like an auditor review. Now, paragraph 39 makes it clear that we're to use the right report, and some practitioners unaware of this section have been using the old report, so use the right report, even though it's kind of weird. Date, on the date completed, and again, like in an audit or a review, the engagement is not completed until you get what I call the rep letter. So we draft both the rep letter and the report, so they should both be drafted with the same date, and we don't release the report till we get the rep letter back. And as I say, I include the engagement letter in that, so I don't have to remember to get it at some other time. Now, what are we to document? Certainly no work. We are to document so an experienced practitioner can understand. And that is something that is in the professional judgment of the engagement partner, and not a bad conclusion for a checklist. I concluded that there was sufficient documentation so an experienced practitioner could understand. Makes it clear again that you got to get an engagement letter, so get one and have a checklist prompt, probably annually. Have a description of the business and accounting system. Have a checklist step. I have appropriately described the business and accounting system and have a box someplace to allow that to be done. And you'll write as much or as little as you think is appropriate in your professional judgment. Reconcile the records to the financial information. That's probably automatic, given what we're doing. So there's a trial balance or something that does that, but have a checklist step to remind us we should do that. Document discussions with management, if any, perhaps in the representation letter automatically. Communicate about matters found, if any, and that's the kind of thing that would require us to withdraw. To have a copy of the financial information and report, so that's our last step in the checklist. I've included a copy of the financial information. I've included a copy of the report. I've included the rep letter. I've got a new engagement letter. And then items on withdrawal. Seeing that is unlikely. Maybe we don't put that on the checklist. Hence, do no work, document no work, but document lots of other stuff. Now, the representation letter, and some people like to call it an acknowledgement letter or an approval letter. Too complicated for me. I want to keep this simple for my staff. There's a rep letter, audits, reviews, compilations, have an example, and everybody knows that they're supposed to complete the standard letter and tailor it as appropriate. There is no example in standards. My preference is to do two things in the rep letter. I'd like to repeat all the things in the engagement letter about third parties, and if any have arisen between last year's engagement letter and this year's rep letter, and also to get the client to promise that if third parties arise after we issue the financial information, that they will do the two things they're supposed to do if third parties are using the financial information, because we never know who the third parties are. I'd like to obtain approval of the financial information, which is in 41F. That's where it's required documentation. 35 says we shall do it, but 41F says we shall document it. There are a couple of different ways you can do it. You can get the management to sign the financial information or do it verbally. I don't like either of those. I would like a formal written approval signed by the client, signed by those charged with governance. I want them all to take responsibility. If we've made journal entries, we are supposed to get approval of the amendments agreed. That's in 41C and in paragraph 40 as well. 41 is shall, 41C is shall document. So if you want the reference, 41 is the place where it says shall document. I want all these things in a rep letter. Now, for instance, we have client provides us with some information and they say, here's $50,000 in accounts receivable. Do we agree it to a subledger? No. Do we retain a copy of the trial balance in the file? No. Do we compare it to last year? No. Do we do an analytical procedure like days, sales, and receivables? No. Do we do any other work? No. Now, this year, there's no allowance for doubtful accounts provided. And we look in the file and we go, oh yeah, we always have to prompt the client. They always forget. So we phone or email the client and say, hey, you forgot this. They go, oh, sorry, forget that every year. Here's the number. We take it, we make a journal entry, we talk to the client. Do we compare it to last year? No. Do we do data sales or some kind of analytical? No. If the client says, oh, I don't need anything this year, do we do anything? No. We just write down, asked, they said they didn't need anything, don't do any work. No, no, no. Accounts payable. There is $30,000 in accounts payable. Do we agree it to the subledger? No. Do we compare to last year? No. Do we get a copy of the subledger in the file? No. Do we do days sales or some other analytical procedure on payables? No. Do we check the subsequent payments? No. We don't do any work. Now, materiality. The word does not appear in the section. It is not required. Don't use it. And remember 4232, which is does not appear to be misleading. Not does not appear to be materially misleading, does not appear misleading. So that is our one and only conclusion, and we don't write anything like that anywhere else in the file. And we certainly don't write the word material in the file. And as I say, normally in this kind of engagement, the client wants us to fix everything, and so we do. And in the rep letter, they say, and we've accepted all that. If we trip over something, we respond or quit. No allowance for doubtful accounts. Hey, client, is there any allowance for doubtful accounts? No, there isn't. Okay, fine. So the first danger, the report. Very dangerous report. Makes it absolutely look like we're doing something. And one of the reasons that I would prefer not to do a compilation if there are third parties, because I just can't imagine that they won't be confused. Danger number 2, waiver of notice. Now, what we may not have understood is the word notice in notice to reader is a legal term. You are putting the reader on notice that they can't use the information. So when we remove that, I worry about that even more. When we call it a compilation report, not only does it look like some kind of report, but we've taken out the notice part. Notice you can't use this. So that again is one of the reasons I would prefer not to do this if there's a third party. I'm of the view that they may not understand. I've talked to bankers who have absolutely understood the difference between audit review and notice to reader. I have also talked to bankers who thought they were all the same. Same level of assurance in a review and a notice to reader as in an audit. So people out there do misunderstand. Now, if a third party phones you, if a banker phones you and says, hey, your client sent me their financial statements, and under no circumstances should we ever send a compilation report to anyone. We give the compilation report to the client. If they want to hand them out, they've got to do the things they've promised to do in the engagement letter. So if a third party phones and says, your client gave me your financial statements, can you help me out? Can you answer a few questions? I am sorry, I can give no assurance. They may not be appropriate for your purposes. I have done no work. Well, I understand that, but how about I have done no work, I can give no assurance. They may not be appropriate for your purpose. Well, how about this question? Same answer. I just not answering because if I start to answer, I've provided waiver of notice and I've now given the banker the opportunity to sue me if the statements are wrong. That has happened far too often in the past. Don't do it. You say absolutely nothing else. Can't help. Sorry. If you have any questions, ask the client. Don't ask me. And there's a decent chance that the statements are wrong if the client is large and complex and there are users. Now, this standard is kind of written by standard setters as if we're doing a compilation on a multinational listed company with lots and lots and lots of users. I can't imagine that. But the bigger the client gets and the more complex it gets, the more likely it is it's wrong, and we won't have caught it because we just did a compilation. Danger number 3. The file has unnecessary procedures. We kept a copy of the accounts receivable trial balance. So we've done more work than was necessary for compilation. So it makes it look like we were trying to find something wrong. It makes it look like we were trying to do it. And if we've kind of half done a procedure that if we'd done it properly, it would have found the error, lawyer is going to make a big play about that in court, and we're probably going to lose. So the solution is do no work, have no procedures, provide no help, and be very careful if you ever happen to get a phone call from the third party. We have done no work. We have no idea. So I prefer simple clients with few transactions, and I prefer a client with no third-party users. And if I have a client that's more complicated, more transactions, and suddenly there's a third party or 2 or 3 using, I think my inclination would be to say to the client, you know, we really should do either a review or an audit because I think the third party users are relying on you and us, and I don't want either you or me to get into trouble. So, thanks for listening.